Hi everyone, this is 3rd of June, new month. Let's see how it looks like at 4 hours to start with. We hope that new month brings new hope and I mean, a big bump, I would say. Not hope. Hope is useless. Big bump even. So let's see. At a lower time frame to start with to see the structure. Okay, we got a nice downtrend line as over here. So and here there is a double bottom, so we can say that this was an attempt, a good attempt. First of all, this was a risky proposition. This was even more riskier because very close, it was very close encounter. And as I mentioned, this was so important. I'll tell you, I mean, from a weekly point of view, this is equally important, not just 4 hours point of view. This level was important. So 26, 27K zone is so important because it's about the structure. It's about this structure. If this structure is broken, then it will have enough energy to bring down price, not just 24K, but could go all the way to 22K and put overall recovery at risk. Of course, we know that there are some other supports from a trend point of view, but that's the ultimate support which I mentioned a couple of weeks ago. So I didn't want, so every time it comes closer, I'm again on alert and update you as well that now you watch out. But as long as it stay away from this lows, okay, good. Now at this moment, I mean, it's a bit, I would say, test of patience because stock market has been going up for last 8 9 weeks. Stock market has been ignoring DXY totally, where the BTC is under influence of dollar index DXY. Now we don't know the reason, of course, but usually what happens that the cash flow into different asset classes, and probably they would go first to the one those with solid fundamentals like stocks and all, and then speculative assets like crypto, means BTC to start with. That's just one theory. We wouldn't know because we don't know the buyers. But logically, um, analysis point of view, macroeconomic factors um, point of view, why stock market rallied, it's mysterious. I would say in so it's I have a different opposite view. So one thing is the Bitcoin definitely didn't follow stock market. As I mentioned earlier as well, we cannot just blindly follow any index, whether it's a stock index or it's a currency index like DXY. We cannot just blindly follow. We have to see the chart itself. Yes, those are reference data point, and we have to see because the coupling happens, and sometimes decoupling happens. Sometimes the coupling is loose, like they are loosely coupled, so that changes, and sometimes we have to take a higher view to see what is happening, because there are phases which I mentioned last time that DXY went up and BTC also went up together. So there are phases like that as well. So those data points are important to see what is happening, like the trend point of view, like stock index Nasdaq went up, and that was encouraging. So I take that data point as like something encouraging happening, because that means there are buyers in these conditions. So if they're buyers for the fundamental stock, good stocks, then why they may come for speculative assets like crypto. So that's just a logical conclusion, not any evidence-based conclusion for sure, right? And this is more from a relationship point of view, not from TA point of view. TA point of view, we stick to the levels which we always talk about. But in this call, I bring up some other points which are relevant beyond crypto world, right? Because my focus is not just crypto, but beyond crypto, especially the fundamental. I focus on stock market, bond market, commodities market, because they are very much related from a macroeconomic point of view, in my point of and of course the Fed's decision. because and all the job report data, uh, inflation data, those are equally important, and we have to put together to see how the fundamentals are doing. And with respect to that, if the technicals are in align with that or doing differently, because ultimately, yesterday I thought of one analogy, very nice analogy. Let's say you are interested in food, and tasty food. Of course, nobody would be interested in ordinary food. Now the thing is, the fundamental analyst, um, how they would approach, I just thought of this food analogy. Like somebody is making food, so you as an analyst, fundamental analyst, could see ingredients that person is using, that cook is using. Okay, all the ingredients. So fundamental analyst would say, oh, you know what, he's using this spice, this meat, or this vegetables, and this combination, this brand, and so on, so on. Okay, that means these ingredients look yummy, the composition you look yummy. And then the cooking happens, and then you know what, they would try to assess that, okay, now how's the cooking going on, how smell is good, yeah, smell is good, whatever, but we don't know about the taste and all, um, and whatever. So they go on doing all this detail analysis, spend huge amount of time, and so on. And ultimately what matters is the taste. So what we do as TA, we don't do anything like that. Okay, okay, we just simply ask, hey cook, are you ready? Cook says ready. Can I taste? Yes, you can taste. You just taste it. If it is good, you take it. If not, then you don't. So it's like that. So I'm oversimplifying, of course, but I thought of this analogy, and I like this analogy because I can I what I mean to say, that whether that cook, the process is good or bad, whether the ingredients are good or bad, how he mixes, in what proportion he mixes, because some ingredients can actually make the food good, some ingredients could ruin the food. It depends on the proportion and how he mixes and all, right? So similarly, there are negative factors and positive factors. They play together in the marketplace, like they come together in marketplace. What ultimately matters is the price. What happens to the price with respect to those events, means those ingredients. So the price is the ultimate food, the product, right? So what it doesn't matter whether there were positive or negative factor. What matters is the net effect of those factors, and that's what the TA is all about. So TA is the analysis on the outcome, where the FA is the analysis on the process. This is the summary. I hope this will give you different perspective and point of view, how the fundamental analysis see the things and try to assess how it might be. And of course, they don't look for the they don't taste the food, by the way, they just stop at the smell level probably, and then assume that this must be good. We don't trust anyone. Okay, we TA don't trust anyone. We see, okay, there are good events, there are bad events, okay, fine, but what happens to my price? That matters. What happens to my threshold, whatever risk level, uh that matters, right? So, like, if the food is spicy, I like spicy, but I have my threshold, right? So beyond that, if it is too hot, let's say, I won't eat it, um right, and something like that. Or if it is too sweet, then I won't eat it. I have tolerance. So that's those are the key levels I could think of. Okay, so I mean, this is just to visualize how I see things, being a TA, and comparing with how fundamental analyst would see, and how we differ, and why we have some advantages over them. But it's always complementary. I wouldn't say it's complementary. Okay, so basically, we analyze on the outcome, and that gives more clarity in my point of view. Unlike cooking, where we get to taste later on, what matters is also we can figure out the trend. So fundamental analyst cannot do that. So if the cook is good today, cook is good tomorrow, if those ingredients, I mean, if that cooks, continue to cook, I mean, then what we do is we do ratings, that this cook is doing good at this one, that cook is, is good at that some other recipe, and so on. So what we do is we do ranking, and that is nothing but consistency of the trend. That's called trend analysis, right? And of course this is probabilistic analysis, and that cook might be in a bad mood one day and may mess up the recipe which he or she was good at, which is totally possible, because he or she is not a bot, let's say. Okay. And then there's unpredictable behavior on one day, so it is possible, even the trend is good, there can be glitches, and some unexpected results. So that's what happens. Sometimes there is dump in between, where the uptrend is going on, and there can be a sudden dump, but doesn't mean that trend is bad. So if the cook mess up a food one day, it doesn't mean that cook is bad at that recipe, and so on. So this, I think, recipe idea came up yesterday only. I just described today first time. But I hope this you find interesting. Anyways, coming back to TA stuff. So why I thought of this, because there's so many factors. You cannot assess those factors and actually rate them or weigh them, that what is the weightage of each factor, and because ultimate goal is to find out the net result. So you cannot figure out, for an example, job reports are solid, that increase the probability of rate hike. If the rate hikes, that means pressure comes back on speculative assets, or I should say assets which require more credit money. So you see the relationship. The other factors are uh, there is improvement in inflation in some part of the world, like UK reported good numbers. There can be improvement in supply chain, and so on. Debt ceiling is resolved, so at least there is no credit crunch, or they can print money, whether it's good or bad or whatever. But those kind of factors, so there are different factors. So how would you know what factor would matter more than other? What would be the net effect of that? So that is tricky, and no, in reality the fundamental analyst would try to assess that and come up with the net result, and we simply do nothing, because we think it's not needed. We think that, okay, that ceiling was approved, what happened to my asset? Nothing happened, that means it's non-event. Why to spend time for last 1 month? What is going to happen, and so on, so forth. If similarly within the crypto fundamental also, people talk about halving and all. Okay, halving is coming, fine. What is happening to my price? Is it improving? That okay, that is helping, fine, good. But if it is not, then that halving doesn't matter at all. So to me, whether it's halving with, so any fundamental within crypto or any fundamental among, so awareness is needed. We have to refer those data, but those are not this decision. I mean, we don't take them and try to calculate them. We just calculate based on price, because ultimately we are interested in the food, not the process or ingredients. The end product matters, basically. So that's how I would put. Okay, so this BTC is here, not somewhere here. We should be worried. Okay, worried. I mean, not in a very literal meaning. What I mean is we should not think too much about it. It is here, so this is totally fine. And now let me zoom out. Uh, of course, it's flat for last 24 hours or more after a nice bounce. And at this moment, I would simply draw this line without any confusion. I would simply draw this line. Of course, you can assume that there would be a down line if these lows are taken out, right, broken. Then, of course, we have to remove this green line. But if I'm taking side from the current setup point of view, then I have to go with this. Not to forget that these are the required levels. These are technically calculated levels which we had earlier, long back. But on top of it, I would say, even if we get, remember I said, even if I get 28,500, I would be more than happy, because that will give me confidence. This bounce was not there at that time. This was on Sunday. I said this on Saturday. And what was the high? 28,447. Very close, almost there, but not able to stay there. So this is just simple TA stuff. Okay. And there's no need to believe it. You have to just see how many times we are able to nail it. That's it. Whenever we nail it, we say, okay, good. But never think that it's always right. Okay. But yeah, trend point of view, you can always assess that how many times we are right out compared to um, wrong assessment. So that way, at this moment, I would say this is the direction, and that doesn't change. So if it closes about this point of rejection, that's the first victory, and then probably this is what we want. If it closes about this, remember the closing, okay, not just touching the closing, but I think we should be okay. There can be a one crazy move where it could go up and go down and then go up and so on, so it may dance that way, but as long as it doesn't return to this one, this is okay. So one do not need to, I mean, I don't want to do how say that how you should think about, but that it's sometimes we think too much, sometimes we think of scenario which are hypothetical or improbable. So even if it goes up and goes down, whatever, let it dance for a while and then goes up. We cannot handle, I mean, we cannot control that. What matters is this must not go back to this level again. That would be bad. Okay. So whether it consolidate here or it comes down here, so over here or doesn't matter. It doesn't matter, right? But this is how it may go. I mean, progress. We'll see. So for now, I would keep this on 12 hours one day. I don't think it would be different. Yeah. Let's look at weekly on stamp weekly. Let's go to weekly. So weekly, yeah, it was close to the boundary, but not close enough. There was nice bounce last week. There was another attempt, but you see, let me hide these drawings for now. This was attempt, but this attempt was not all the way down, right? So there was no threat this week, and even now. So what we want is, can it close this week with green candle or about this, which I mentioned, 28,500? If it does, I'm more than happy to start with. Right? This is where as I said, I'm not concerned, but I had to keep an eye for sure, because this lower range is still close compared to where we want to be. So once it closes somewhere here, then that concern, or concern is negative term. What I mean is we don't have to watch out. That's what I mean. We don't need to. Right now we have to watch out. Okay. Concern is emotion, right? So I use that sometime, but what I mean is attention. I think that's the right word. Attention. I should use that. Attention. So we need attention here, not concern, because we have planned something. So if we plan, we should not have any concern. Yeah, we could have regret later on. I mean, just little disappointment as being human. That's natural. If we are stopped out, of course. But there is bigger regret if we don't have stops, and if we are not aware of the key level, and there is bigger regret. So it is better to have better to face some disappointment that, okay, we want it to go up, but it didn't, just in case. So for now, only attention is required. There's nothing negative I see, and that's why I have added the upside arrow just now. Okay, so from a last time I mentioned, whether it comes down and goes up or whether it goes up from here, it's one and the same thing. It doesn't matter much. Okay, from a weekly point of view, we don't want it. We don't want it to close below 25K from weekly trend point of view. That would be bad, because in that case, then what might happen if I briefly touch base that scenario? Not this scenario is totally I mean, it has a very low probability. Breakdown probability is like 30%, upside probability is still 70%. Okay, so there is no ambiguity in terms of the weightage is more on the higher end. So but we, from education point of view, from awareness point of view, what I don't want to see is closing below this, because from a pattern point of view, then it would create head and then potential bounce, and then could create a shoulder like this, where this is left shoulder, this is head, and then this is right shoulder. You see, we don't want this to happen. That's the thing, because head and shoulders, of course, not 100%. No pattern has 100% probability. Remember, some patterns have 60% probability, 70% probability, but nothing like 90% probability. Even forget 100%. I have seen, because what happens is head and shoulder, just to touch base head and shoulder, because education point of view, that when you see this one, TA has to think about a scenario, right? And one scenario is that it goes up, that is happy scenario, and then another scenario is an exception scenario. If you're a coder, programmer, you know that when you do coding, you don't do coding just for happy scenarios. You do coding for the exception scenario as well. Let's say if you filling a form where you're supposed to enter, let's say, telephone number, and you start putting alphabetical basically characters, uh, then instead of numbers, then there has to be a validation, something like that. So you have to think about exception scenario, um, and then code for it, right? Similarly, we as a TA we have to think the negative scenario or exception scenario as well, so we are prepared mentally. Because when it is forming, I would not say this is head and shoulder. By no mean we can say that. Only we can say when it goes down all the way here, and then we can say the head is formed, and then if it bounces, then right shoulder is in formation. And by the way, many head and shoulder, this is still not head and shoulder, because head and shoulder has to complete the right shoulder, then only we can say head and shoulder. And then the probability of that pattern is applied. Remember, the probability of that pattern doesn't apply when it is making, it applies only when the pattern completes. Now this is a pivotal moment in head and shoulder. Why this? Because this becomes the neckline. We call neckline is the support line basically. And if this neckline is broken, then it would go for the downside. Okay, and how deep it has to be measured and all, right? So basically that's head and shoulder. So at this moment it's not head and shoulder, so this is just a clarification, right? If you look at this pattern, which had we had head and shoulder actually at two levels. One, we had this was right hand side shoulder. You would not see much on one week, but you would see when I expand, go lower, you will see this one. Of course, not head and shoulder are symmetrical in nature. Sometimes some shapes are deformed. That's why the human's brain is amazing, and we detect patterns which is impossible to do program. Yes, maybe now the AI is advancing, the AI could do it, but still AI has to be trained with so many data that this is head and shoulder. So that way, of course, AI is so powerful these days that we cannot say it cannot do. It can do, of course, when it is trained and if the algo is good. So, but we should appreciate human brain until AI reaches to our capability. Of course, the AI is going to go beyond our capability without any doubt. I have no doubt about it that intelligence will be more higher with AI. And I often say that the people who have something which a machine cannot do will have value. And you might think it's more philosophical, but this is my view that only the emotion will matter, I think. Only the emotion. Right now, emotion is not so important. It's not a commodity. What is the commodity is the intelligence. So in ancient time, person who had muscle power had the value. Of course, the intellectual mind always had value, but the muscle power had also huge value. Okay, then when we invented tools like mechanical tools, then those muscle power related, you know, people were not so needed, only in arena or some gaming, but not in real life. Those all of a sudden their value was nothing. So I'm bringing that example purposefully. Otherwise, in wars or so many places where you have to lift heavy things or basically guard something, or you need those people. Now, those people, after those mechanical devices were obsolete. But the intellectual remain in value, and more with the programming and coding and all. I was in IT, so being an IT, I know that I was paid more than other streams. When we were doing engineering, other stream engineers from other stream were not compared to computer engineers or computer science graduates. Um, so our salaries were much higher, and we used to feel it simply demand, because of demand, right? So it's all about demand, and the value is all demand driven, right? So now I think that the AI is advancing so much, then intellectual value, of course, would be appreciated. I'm not saying not. Like today also, if somebody has physical power, the person is appreciated, but not so much of value compared to past, right? So similarly, intellectual value, what we have, and what value um, basically yeah, we have in the society from a demand point of view, it won't be there, because the AI will replace without any doubt. So I thought, then what will be our value? So then I thought that probably only value that probably we would be cherishing is the like emotional value, because nothing else would left with us otherwise. See, even of course arts, some kind of skill, that will matter. But AI is now doing painting, AI is composing music, AI is writing poetry. So even that area is actually invaded, right? So I don't know where it will stop, and it's going to be very challenging that way. And we can talk about that later. This, I don't want to digress, but until then, we can appreciate how human brain could identify this kind of patterns. So we had head and shoulder here, basically. Then there was a breakdown, and so on, right? So let me go back to our main business, right? Um so we don't want head and shoulder over here, basically, and it's not happening. So we don't have to think about it. Okay, but just a scenario we always talk about. So I should remove it. So let's look at monthly once more quickly, how it looks like. I would like to hide all the drawings and see. So last month was bad, but not so horrible. It closed here, but not literally. So the last month was 26981, and the closing was 27219. So it did go below the prior candle, like April candle, but closed above that low, which gave me comfort as a TA. And this is just a beginning. This is just a second day, and looking good. No, it's not approaching the last month's low, by the way, so that's positive, right? So there is absolutely no need to think from a negative point of view. Let's look at the uh, big picture. Like we had this kind of a setup here, I would say somewhere here, not the same one. If you pull this bounce all the way here, then you would find that this particular setup or price action is more or less similar to this one, where this was the all-time high. Let's say this is all-time high, and as I said, you had to pull this one. If you pull this one, then you could compare with this. By the way, this move was, I think, ETF related. To me, this could have gone down from here. I think this was euphoria from ETF, and that ETF didn't get approved ultimately. So there are some cases or phases which I remember which were totally unwarranted, or as if like, as I say, how I express that there is a play and there is some kind of a unknown character comes in or an unknown plot comes in, like surprising something, that kind of a thing. So this move was actually, I was expecting this kind of a move from here, to be honest. This was totally surprising, but I accepted. But then when it started retracing, that okay, I assumed that okay, now it's happening what I was expecting here. This was all ETF stuff, no volume, and it was just kept on going. Similarly, this drop was totally COVID related. It was not part of the playbook. This could have gone up from here. This was totally like detour. This was detour on the upside. This was a detour on the downside. And similarly, this could have gone up from month of October, not all the way here, but because of what FTX happened. So this was a drop from FTX, thanks to FTX. So this kind of digression, detour we see in some cases, not always, but there are some major events that could drive or kind of change the path for time being, and then we are back to where it was supposed to go. So like that. So yeah, so this drop is like this capitulation. This is like, this didn't go all the way. Like as I said, if this FTX wouldn't have happened, this would not have made new low. And in my opinion, this candle would have actually progressed like this one and gone up from here. So this we wasted two months in FTX drama. So yeah, I mean, then there can be this can be nice another trend on the upside, right? Don't forget the support level, right? That's always a precondition. Whatever I said, I never say anything with a with absolute probability, because it's not that I know the future. I had to put a condition, and that's the right way to do, right? That's the right way to do. You cannot give um like projection like this is going to happen. Anyone who does that is probably overconfident, as if he's coming from, he's a time traveler. Nothing wrong in being confident, but saying that this will happen. If you see anyone using the will, will kind of statement, I mean, that means he's too overconfident, because that's too much. And if someone, even if someone said this is going to happen, that's also too much. We can say, yeah, if you're too very confident, you may say that this is likely to happen, which is totally all right. Okay. Or this could happen, if you want to be a little neutral, not uh, or this is probable. This kind of statements suits well to TAs, in my opinion, because we talk in terms of probability, not like a future like prediction. Anyway, so yeah, so right now we would like to see a nice bounce from here and a new trend, and that new trend actually go, of course, high. We'll talk about it. But why do worry? I always think that if we don't see we are healthy until we see sign of weakness. Many people say, what do you think about Bitcoin price and end of the year? Oh man, I mean, how can you know about it? Forget about it. You don't know how much gram of food you are going to eat 2 days after. So forget about Bitcoin price after a year or year end. You don't know how many breath you are going to take to after tomorrow. You talk about the price by end of the year. It's just speculation, simply the speculation. So it's useless. The simple approach is this, that whether you do every day or every week or every month, whatever is the frequency, doesn't matter. You just see that how is the health. Focus on the health. If the health is good, that means it's progressing, right? And of course, you see what you assess is the rate of its in movement, whether it's in consolidation or going tangent, I mean, going at certain angle and so on. That will give you the strength and all. So you can assess the strength. And but it's so simple that you don't have to think about it. And sometimes what happens is because somebody thinks that this is the level where up to that the one this coin might go, and they may sell that level for no reason, and TA would do the opposite. TA would just keep on focusing on health, and TA would exit only when there is weakness, when the trend is at risk, or them and what and those drivers, the support will tell us and so on, right? So simple. Why to worry? I mean, just enjoy. um okay, so that's monthly. I hope you get the idea. On a weekly trend, monthly trend, I gave a couple of analogy. I hope you find interesting. Before we end Bitcoin session, we would like to see what DXY is doing. Remember, these are reference data point, and let's see how they're doing. So right in the middle, so I drawn this line indicating this bluish sign line, indicating trend, uh, where it is stuck right now, and then the orange line indicating the resistance where it was rejected. As you could see, and the DXY is right in middle of it. Okay, so this was a bounce. We had identified this bounce long back, as you know, and this bounce has actually caused trouble for BTC, as we know. So it's not surprising. What we have to do is we don't have to act on DXY. We have to see if DXY is affecting BTC, then we have to consider it. If DXY is not affecting BTC, then this reference data is irrelevant. Like if I'm in the stock market is totally ignoring DXY. So if I'm in stock market, I wouldn't even look at DXY because it doesn't matter. It's a non-event because it's not affecting at all. But we have to look at DXY because it's affecting. So that's why we want to see at least briefly that what it wants to do. So as I mentioned earlier as well, of course, this is a bad sign, but not really a risk unless it closes above this point of rejection, which is 105.5, let's say, a round figure. So in that case, then there is, then also again at that time, if BTC is still coupled like how it is right now, then that's a concern. So again, so not just price, but we have to also see whether BTC, because what if DXY also bounces and let's say it reaches 105, 106, but BTC doesn't care, like what stock market is doing. If BTC doesn't care, then I don't care about DXY as well. As simple as that. Because I'm not trading DXY. So it's so simple. So that's DXY. Similarly, bond yields, I think, would have similar thing. So we had this line last time. Uh, it couldn't close above this one. Not really, marginally, but okay, it got rejected. Maybe this level is not, uh, but yeah, it's, I don't want to go at a micro level because we are not trading this one, and it got rejected after brief, I would say, spike or bounce. So yeah, this is under pressure. So again, we cannot say this is dead unless it breaks the support, right? So, but yeah, the pressure is on. The pressure is on yields for sure. But we know that this Fed, the power, if he goes mad and raises interest rate again and again in July, depends on the situation. So what we have to see is the inflation doesn't go up, the core inflation and all that stuff doesn't go up. So we have to keep an eye on those data. Those are relevant data for sure. Okay, so far so good. So I would end this session, BTC session here. Any question, feel free to ask me. I think I covered everything that I wanted to. Hope you find it useful. Thanks.